Good evening, everyone, and welcome to Boston College. How many of you here are alumni? Great, welcome home. We are always happy to have you back here at Boston College. My name is Jean Chiser, and I oversee the alumni education programming here at BC. So tonight, you would think that buying a home should be a pleasant experience, right? Well, our panelists are here tonight to help you navigate all of those different areas that can sometimes make it not quite so smooth, but they're going to take out all the stress for you. So let's get started. Our panelists tonight include Liz Perez Barletta. She's a graduate of the class of '07. She's a real estate attorney from Ligris and Associates. We have Brian Brown. He is a senior loan officer at Guaranteed Rate. We have Tom Matthews, a realtor from Gibson Sotheby's, and Brett Sade, a financial advisor from Ameriprise Financial. Each panelist will share from his or her own expertise, and then there'll be time for question and answers. So I'm going to turn this over right now to Liz.
All right, thank you so much, Jean. Thank you, BC. Any '07 grads out there? Oh yeah, all right, perfect. I just want to thank BC for really encouraging us to come back. We did a presentation similar to this last February, and it's so great to see new faces, new home buyers, maybe people who have bought in the past and are new, or sort of going to go into the process again after many years, and we're just really excited to be here. I'm just going to point out a couple things that you have in front of you. You have a beautiful gray folder with some information. First off, you have your slides. Encourage you to take notes in the designated spaces to the right. If you have any questions, we're sort of going to reserve the time at the end for questions, so don't forget those questions, write them down, and we'll talk about them at the end. Additionally, behind the slides, you have a financial checklist, and so you can sort of follow along with the presentation and fill this out as well. After that, you have a home buying checklist, sort of just little things to do or to think about throughout the process. And finally, possible fees in every stage of the process as well. So these are for you to take. If you have any questions, feel free to reach out to us, of course, during the question section, but also after the presentation is over.
My name is Brian Brown. I'm with Guaranteed Rate Mortgage. I'm the mortgage guy, part of the team. What we've done, just to kind of reiterate what we're doing here, is we're going to take you through a couple's experience buying a home. It's super easy. We were talking to somebody out here earlier before, and they were like, it's a very stressful time, buying a home. It doesn't have to be, right? There are only really 7 steps to buying a home, and we're going to walk you through each of them. If you don't hear anything tonight and you don't remember anything tonight, just put the right team of people around you and you'll be fine. It's not your job to memorize everything. I see people taking notes. That's awesome. But you don't really need to remember. You don't need to memorize any of this stuff. If you have the right team of people around you, and we'll tell you where to find those people, you're going to be fine. It should be a very pain-free, stress-less experience. Okay? So what I'm going to do is I'm going to talk about the actual pre-approval. So just for my own curiosity, anyone trying to buy a house like this calendar year? No? Okay, good. Next year, maybe? Oh, there was one? All right. Next year, maybe? Just curious? Okay, and then some people just here just for information, right, for the most part? Okay, very cool. I like to see that, because the question I get all the time is, when should I get pre-approved? The answer is, as soon as possible, because I can't tell you how many times somebody's come to me looking to get pre-approved, looking to buy a house a month later, only to find out that there's a problem on their credit report they never knew about. The earlier you come to your mortgage person, you go to your mortgage person, and we start looking at things, if there is an issue with the credit, we can figure it out. You have plenty of time to fix those issues, so not only can you buy a house, but you get the absolute best interest rate when the time comes. Okay? So do it as soon as possible. So let's talk about the actual pre-approval. So what is a pre-approval? Difference between a pre-approval and a pre-qualification. A pre-qualification is just you calling me up or your mortgage person and saying, I make $100,000 a year, I have great credit, I have 20% to put down, what can I afford? Okay, that's a pre-qualification. I'll throw you out a number. Okay, a pre-approval is based on documentation. So then if you send me your W-2s, your pay stubs, all that documentation to support what you're telling me, then we have a pre-approval. And then I would actually be able to issue you a pre-approval letter. That's really the only difference between the two. What does it cost to get a pre-approval? It really shouldn't cost you anything. Some mortgage companies will charge you an application fee. Has anyone gotten a pre-approval and paid an application fee? No? Okay. Most won't. Some do, because that will tie you to that lender later on. You do not have to, just because you get a pre-approval from one mortgage company, you don't have to use that mortgage company to get the financing. Okay, so if you got a pre-approval from one company, you could do the actual loan with another. So you don't have to pay an application fee with most mortgage companies. Okay, a pre-approval should only take about a half an hour, assuming we have all the documentation that we need to get you pre-approved, your W-2s, your pay stubs, which I'll go through. It really should only take about a half an hour. It can be done over the phone, it can be done in person, it's up to you guys. Okay, where to find your lender? Honestly, the first place I would tell you to look is to talk to anyone that you know who's had a positive experience buying a home or refinancing. That's a great person to go to and ask, and get a referral to that lender. Okay, there's a lot of people know a lot of lenders. Anyone you know who's bought a house, go to that person first if they had a good experience. But let's talk about the different types of lenders out there. There are basically 3 different types of lenders. You have a community lender, okay, like your local credit union. We're all from towns that probably have credit unions. Okay, this is a place that you can go to get a loan. Typically, the credit unions are going to want the cream of the crop, 20% down, perfect credit, a lot of assets, which, we were talking to somebody over here, it's like in this area, east of 95, $400,000 is probably an average purchase price on the low end, maybe. So as a first purchase, who here has $80,000 to put down, right? Hardly anybody. Okay, so a credit union sometimes may not be the best fit. A broker is the second type of lender. A broker is somebody that you're gonna go to and fill out an application, and they don't actually lend you the money. They're gonna shop your application around to a bank to find you the best deal, or just to basically get you financing. Okay, sometimes with the broker, it can be a little bit more expensive because there's that middleman fee involved, and the brokers, because they're not doing the loans with their own banks, don't have direct access to the underwriters and closers. Okay, the last kind is like my company. We are a direct lender. Wells Fargo is another direct lender. Okay, we are lenders who are going to be lending our own money. Typically, you can get better rates, you can get cheaper closing costs, and we have direct access to our own underwriters and our own closers. Okay? All right, now let's get into the actual pre-approval. So really, there are only 4 major parts to a pre-approval. The type of property, your assets, your income, and credit. And I'll just go through each of them. I can elaborate later on in the question and answer, but property type, okay? So you want to have a rough idea of what you're looking to buy. You're looking to buy a condo, you're looking to buy a single-family home or multifamily home. Okay, we're not going to hold you to it, but just have some sort of idea because the qualifications do change depending on what type of property you're looking for. Okay, is it going to be an investment property or a second home like down the Cape? Okay, these are things that we need to know. Your down payment, where's your down payment money coming from? Okay, acceptable sources are what you would think, checking and savings. Brett mentioned 401k. Okay, gift money is okay from parents, relatives. Okay, a bag of cash that came from under your bed is not an acceptable source, okay? We need to clearly be able to figure out where this bunch of money came from, okay, and usually track it. So if you're gonna get a gift from a relative, make sure they don't give you cash, green cash. Make sure that it went through the banking system, some form, so that we can track where it came from. Okay, income. You wouldn't believe how many times people come to me looking for a pre-approval and they don't know how much money they make. Have a rough idea of how much money you make. It's unbelievable. I can see it. Hourly employees, your hourly rate, your wage changes. So, just have an idea of I make this much per hour, I work this many hours a week, and if you get overtime, mortgage companies love 2 years for everything. Okay, that's just how it works. We like to see 2-year averages. Okay, so if you are a commission person, we're going to look for your 2 years of average commission. Okay, overtime, things like that. We always look for 2 years. Self-employed. Any self-employed people in the room? No? All right, well, you guys are easy. But if you know somebody or you're buying a house with somebody who's self-employed, usually 2 years. There are ways to do it with 1 year, only being self-employed for a year. So I won't even spend time on that. And then the last one is credit. I could talk all day about credit. I'll answer as many questions you guys want to ask later on about credit, but I'm going to be real brief with it. I have like 30 seconds to get this out. So as far as credit is concerned, every one of you should have 3 credit scores. Credit scores go anywhere between 300 and 850. Okay, in the mortgage world, not what you see on TV and all that, but in the mortgage world, any credit score above a 740 is going to get you access to the best interest rates out there. Okay, so that's kind of for the mortgage purposes, that's kind of the magic number, 740 and above. So how do you get there from your credit perspective? You want to obviously make your payments on time. That's a no-brainer. The one that most people don't know is keep the balances on your credit cards under 30% of the maximum limit. Okay, so if a $1,000 limit on a credit card, keep the balance under $300. And that'll keep your score high, or get it higher, okay? All right, so let's go to our lovely couple in love, Tom and Giselle. So let's go back to just their income. So they make basically $116,000 a year combined. That's $9,667 a month. Mortgage companies are going to use 45% of that number as your maximum amount of debt that you can carry per month. So in this case, the maximum amount of total debt that they can have is $4,305. Okay, we take that number and subtract out the debt that they had on the page before, which is like their credit cards and student loans. That, trust me, it all adds up to $1,825 a month, which leaves a maximum mortgage payment allowed of $2,480. Okay, if you're not following me, don't worry about it. Trust me, the math is all right. So in this particular situation, they can afford that much of a mortgage payment with all the other debt that they have. Assets, we already covered. They're getting $10,000 from savings, $10,000 from a gift from their parents, and then $10,000 from retirement, 401k. They're looking to buy a single-family home that the sellers are asking for $400,000. The taxes on this property are $5,000 a year, which is $416 a month. Insurance is about, homeowners insurance is about $900 a year. It's about $75 a month. So they want to make an offer at asking price, $400,000. They only want to put 5% down, which is doable. Okay, you could do 5%. I can answer any questions on minimum down payments later on. This particular situation, 5%, that's $20,000 down. You'll see that they have 30. They're only putting down 20. That extra 10 is going to be for closing costs, for taxes and insurance, all that other monies that is owed at the table, which is actually in your packet on the list of fees that you have to bring to closing. Okay, so they're going to do a $380,000 loan amount. On a $380,000 loan, I think I did the rate somewhere in the mid-4s, just as like a high rate. That's going to give them a total mortgage payment of $2,473, including taxes and insurance, which is less than the $2,480 that they're allowed. Therefore, they're pre-approved. Okay? Ta-da, done. All right, so at this point, now that I've done the pre-approval, I would hand them over. I would refer them to a realtor. In this case, happens to be Tom Matthews, Gibson Sotheby's, and he would take it from there.
Thank you very much, Brian. That was great. So yes, my name's Tom Matthews of the Tom and Joanne team. And Joanne would normally be here. She's a BC grad like a lot of you guys, or all of you guys, I think. But she just had a baby last week. So she's not here today. And I have to apologize up front. If I yawn at all, I have a 4-month-old baby. And everyone told me when he was 1 month old, when he gets to 4 months, he'll sleep through the night. And they were just trying to make me feel better. So we now get to the fun part, the real estate, looking at the houses. You know, talking about numbers can be a little bit, get you a little tired. It is the most important part, but the fun part is selling houses. So as a realtor, a lot of people ask me, like, what do I do? I help people sell houses, but why do you do it? I do it because I love teaching people and helping them reach their dreams. So what I want to do today is kind of talk to you about, as you go through your buying process, how to interview a realtor to make sure you have the right person on your team. I would love for all of you to buy a house with me, but the reality is you're going to be working in different areas and you're going to be meeting people. So you want to find a realtor who has excellent listening skills. The biggest complaint people tell me is that they meet a realtor, tell them they want to buy a 3-bedroom ranch, and the realtor shows them 5-bedroom colonials. So find someone who wants to listen to you. The realtor is going to then help save you time and energy. They are going to be there because you have a full-time job, and your third full-time job should not be buying a house. The realtor is going to be there to help find you properties and so forth. We're going to educate you. Educate you soup to nut on everything you need to know on buying a home. We're going to cover a little bit today, but if you want to know more, you can either see us after the meeting or we can set up a follow-up consultation, because we typically spend about an hour sitting with buyers, covering everything they want to know about how to buy a house. Determine what price to offer. That is the biggest question that people come to us and ask us is, how much money should I offer on this house? In our example today, we're going to talk about full price. We are in a market right now where you've probably read in the media, houses are selling for asking price, if not more. But that will change as the markets change. So we have to educate them on what to offer, show them ways to get more value. Yes, you want to get the house, but maybe you want that flat screen TV, maybe you want the washer and dryer, the refrigerator. There are ways to get value in the transaction in addition to getting the house. So you can kind of talk about those things as well. And then the availability, I'm just going to fast forward. My business partner, as I said, made this presentation. She likes all this fancy stuff. Be available to take your calls. Probably the biggest complaint people have is that they call their trusted professional and they don't hear from them for 3 or 4 days. You want to have someone who's going to be available for your calls, talk to you, and so forth. Offer you peace of mind and top-of-line service. We do not sell products. I am a firm believer that the house will sell itself. When you find the house that is right for your family, for your situation, our jobs here is to make that work for you, but it's not to push properties on you. Our job is, once you find the right house, to help make that process as smooth as possible. All right, home finding service commitment. I'm just going to throw these out here real fast for you guys. I apologize. Oh, I went a little too fast. Brian was telling me beforehand, he's like, do you know what this looks like? And I said, I think so, but I know Joanne made it. So the home finding service commitment. The biggest thing that you want with your realtor is to make sure that they are going to represent you. There are 2 primary ways to be represented in a real estate transaction. One is having a seller representation. The other is a buyer representation. In Massachusetts, I like to call it the rite of passage. When you buy your first home, there is no cost to you to use a buyer's agent. I say it's a rite of passage because when you sell that property, you will pay a real estate commission to a realtor who will split it again with another buyer's agent. So there's no reason why you should not use a buyer's broker on your first transaction. They can add a lot of value to the transaction if you hire the right agent. They'll introduce you to neighborhoods. Probably the best advice I can give anyone out there who's thinking about buying a property is to create a needs and a wants list on a piece of paper, particularly if you're buying as a couple or as an individual. Put down on one side, what do you need in a property and what do you want in a property? That will help you determine what areas to be in, what communities, what kind of parts of town, what kind of properties. Because really putting that out there. I met with a couple one time and I said to the husband, where do you want to buy a house? He goes, I want to buy a 3-family in Dorchester. And the wife says, I want to buy a single-family home in Concord. And they hadn't had a discussion of what their wants and needs are. So talk to each other and put it down on paper. So deciding how much to offer on a house, that's the next kind of big question that people ask us, is how do I decide how much money to offer for this house? So a couple of acronyms here. ACT is a short for properties that are active. That's a property that's on the market, doesn't have an offer on it. UAG is a property that has an accepted offer. Sold is a property that's sold recently and then expired. The job of a good realtor is to look at a house that is sold. And you're basically looking at a past buyer behavior and trying to predict a future buyer's reaction. So when you see that property that a realtor has put on the market for a certain price, our job as the buyer agent is to assess whether or not that property has been properly priced and then helping the buyers to make an offer. Because our job, in addition to helping them find a place to raise your family, is to make sure you make a good financial decision. We do not want to have anyone calling us saying that they are underwater, that they can't make their mortgage payments, and that they can't enjoy the lifestyle that they've become accustomed to. We want you to be able to enjoy your lifestyle while adding a piece of real estate to the equation. So we help people identify what their objectives are. Are you living at home with mom and dad right now so you have an unlimited amount of time? Are you in a lease that's expiring in 90 days? Your particular situation is all that we care about. We want to help you tailor the offer around your life. So those are the questions that we'll be asking you to help you to be able to make a proper offer. Because frankly, if you can get a seller who really needs to move and you can close quickly, you can oftentimes save yourself a lot of money. So we can use your terms. The object of negotiating is to create leverage. The more leverage you can create in a situation, the more beneficial you can make the terms of the deal to your side. So you want to try to do what you can to create as much leverage as possible. So you talk about knowing your maximum. Now, Brian talked about how our couple can afford $400,000. Now, we want to know what their maximum is because that could change from property to property. We might find a property that's a cream puff. It's in great condition. It doesn't need any work. So they may want to stretch themselves financially versus if we find a property that needs work, that they need to actually spend some money on. So you got to kind of have to go through those ideas as well, understanding what your skill sets are and what your ability is for hiring and managing people if you're not going to do the work yourself. So understanding being prepared for a counteroffer. We always say that I'm selling a house right now and we were on the market for $800,000 and we got an offer for $800,000 and my seller said, well, counteroffer. I want to try and get more money than my asking price. And we actually countered someone who gave a full price offer. And they said, Tom, how can you be counteroffering us? We gave you a full price offer. I said, that's the nature of this market that we're in right now. And they ended up coming in over the asking price. So, you got to understand that in the market, when you are ready to buy, it could be a different market. At that point, properties may be selling for 5 or 10% less than asking price. At that particular time, when you're in the market, understand what the market is doing so you can prepare yourself for a strategy. Probably the biggest shortfall I see from buyers who are not properly represented is that their agent didn't discuss with them the strategy up front. And they make what I feel is an excellent offer, but the seller may not agree with me. And then the buyer gets all disgruntled because the seller won't take their offer right away. And they sometimes walk away from a property where if they were properly prepared and had the right expectations, they would know it's just kind of part of the game and they could stay cool and comfortable and secure the property. So, strategy, accepted offer. All right, so where do you find properties? So a little pitch for ourselves. We do have our own website, the Tom and Joanne team, if you want to support a BC grad. You can also go to Zillow.com. It's an awesome website. Really great information. They have what's called a Zestimate. If you guys aren't aware of it, it is an awesome little tool that has a little algorithm that will tell you, roughly what properties are worth. One kind of buyer beware is that in Massachusetts, Zestimates can be off by up to 20%. Where they are extremely effective and accurate is out in California and Nevada, where you have thousands of tract homes, where every lot and square footage are all the same. That's where Zillow kind of cut their teeth, but it's still a neat tool to use up here. But just if you're using that and you're trying to figure out values, just keep that in mind. And Trulia just got acquired by Zillow and Realtor.com. 35% of the buying public go to these 3 websites. That are on the web. So if you're looking for places to start your search, the average buyer spends 18 months on the internet before they go out looking for homes. So if you're in that position now, it's okay. You'll be kind of the normal. When I get people who contact me, they've already been online. So they've seen the properties, they kind of have an idea of what they want, they've done their needs and wants list. Now they need to go out and breathe the property. They have to see how their furniture will fit into the space. So our couple, Tom and Giselle, were looking in South Boston for $369. They could get about a 700 square foot unit in Boston. Or they could go to Waltham, same price point. Now they're up to about 1,200 square feet. Or they could go out to Framingham, same amount of money. Now they're looking at about a 2,000 square foot house. So deciding about how much space you need, it will dictate where you want to be location-wise. They found a great house in Framingham. Single family home was on the market for $415,000. They offered $400,000. Is that what I said? No, they make an offer at $385,000. Seller count is at $400,000. Sorry, that 4-month-old baby. I apologize. Offer was accepted at $400,000. A home inspection. That is, after you have an offer accepted, within 7 days, typically, you're going to have a home inspection. Now, home inspectors are licensed in the state of Massachusetts. As a buyer's agent, we have the ability to introduce you to home inspectors. When you want to get the right home inspector, there was recently an article in the paper talking about the kind of buyer beware, these people who bought a home, didn't get a good home inspector, and are now paying thousands of dollars to fix their home for things that were not identified. So you really want to make sure that you identify issues. set about a half a day aside, and the idea of a home inspection is to find items in the home that you can't see with your naked eye. So when you walk up to a house, you're gonna be able to tell if the roof is older, if you have older windows. But this is about as casual as I dress, and I tell that to my clients all the time. So I'm not playing in the basement, I'm not taking off electrical panels, I'm not crawling around in attics. So you kind of really wanna make sure that you get someone who's wearing dungarees and a t-shirt, and they're kind of going through this house so that you don't find any hidden defects. And the biggest hidden defects are the ones that pop up that have to be fixed immediately. Because the cost can vary on these properties. If you find mold in an attic, say you have a vent coming from a bathroom and it gets vented out to the attic rather than going outside, and you get mold in your attic, mold that can cause allergies for people. So you want to get that rectified, and you don't want it to be on your dime. So you want to make sure that you take care of it. As Joanne says, the main objective of the home inspection is to make sure the house is warm, safe, and dry. That's the most important components, is it's warm, safe, and dry. But a furnace right now can cost you $5,000 or $6,000. So if the furnace is having issues, you want to know about that, because you don't want to move into a house after coming up with this monies that you get from mom and dad and pulling against your 401k and then finding out that you need a new furnace within 90 days. So that's kind of like what we want to do. With Tom and Giselle, they found out that there were defects, and when you find defects, we do have the opportunity to renegotiate the transaction. And what we were able to do is get them a $2,000 closing cost credit. And this allowed them to keep more money in their pocket so that they would have that money after the transaction closed to be able to fix the items. So, purchase and sale agreement. You now are very close to owning your first home, and we hand it off to our trusty attorney.
All right.
Thank you, everyone.
Thanks, Tom. So, going back to the steps, just to recap, where are we? We're at step 4. First was pre-approval with Brian. Step 2 was getting an offer accepted with Tom and going through the home inspection. And now we have completed the home inspection. It's time for the purchase and sale negotiation. So first, the cost associated. Generally speaking, you could estimate that you're going to set aside $300 to $1,000 for an attorney to represent you as a buyer throughout the transaction and negotiate that purchase and sale agreement. I say generally because we all have a family attorney who maybe practices generally. More often than not, you may find they're going to charge you on an hourly basis. But if you do hire a real estate practitioner, for the most part, we do flat fee service. So you can expect a range from $300 to $1,000 with the possibility of discounted rates, which I'll touch upon in the next couple points. Time frame for the P&S. Generally, that's already established within the accepted offer. We like to see maybe 7 days from the inspection, the inspection completion date, just so parties have the time to actually review the agreement, feel comfortable with what they're signing, but that's not always the case. Maybe if you're trying to win a bid, you're maybe going to tighten those dates and turnaround times. So of course, the time frame for the actual signing of the P&S can vary, but you will look to the offer at what was accepted by the seller to sort of give you that guideline of when that purchase and sale agreement will be signed by both parties. There are 2 types of attorneys that are representing sort of the buying side in the transaction. You have your buyer attorney, and then you also have the bank's attorney. Now, oftentimes that will actually be one and the same person for various reasons. One, sometimes it's better to have less cooks in the kitchen, and if you have a bank attorney and a buyer attorney, you don't know who you're asking what to, and it can get confusing for a client. Others really enjoy having those roles separated because you're talking to your buyer attorney about any questions that arise throughout the transaction. You're talking to them regarding the negotiation of the purchase and sale agreement, and they're the ones at closing with you. But the other side of the coin is you could be offered a cost savings by having that one attorney represent both you as a buyer and your lender. So generally speaking, we see either waiving of that $300 to $1,000 fee completely or discounting it down. It really depends on the attorney. It depends on what type of property you're buying. Maybe it's a brand new condominium that has been converted from a multifamily home, and there are new condominium documents that attorney needs to review. So in that situation, they may not waive the fee completely if they're representing both you and your lender. So a couple things to consider. First and foremost, your comfort level. Do you want one person representing both parties? From a legal perspective, we're actually permitted to play that dual role because the legislature says that we don't have a conflict of interest with the lender because both the buyer and the bank want the closing to go smoothly, all liens and encumbrances to be paid off at closing, and the issuance of clean marketable title. So the goals are similar, so we are permitted to actually play that dual role. The drafting of the P&S, so generally there's a seller's attorney and your attorney, whether that be just representing you or that same attorney who's also representing the lender. The first draft is issued by the seller's attorney, and it's our job as buyer's counsel to throw in a lot more pages than the standard form. Usually the standard form is like 3 or 4 pages. By the time we're done with it, it's around 9. So it's really important to have that advocate for you from the beginning of the process to be able to explain to you first and foremost what it is you're signing, and also to have the benefit of especially the additional representations and warranties that we require or encourage our sellers to make through the purchase and sale agreement. Time necessary, it really depends, sort of going back to the family attorney piece. Most real estate practitioners who focus on real estate solely, they understand the time frame and the timelines, and especially if you've submitted a competitive bid, it's really important to adhere to those time restrictions. Oftentimes, if you have an attorney who doesn't necessarily practice real estate conveyancing, they may, see that the date is next Friday, but maybe put it off until that day. Whereas myself or other real estate practitioners want to get it done as quickly as possible so we can quickly get the purchase and sale agreement over to Brian and start sort of the underwriting process. So if we can get things done in a more efficient manner, that's our goal. Inspection items, so if there were some inspection items that came up, more often than not the agents are the ones who are discussing credits or repair items, something like that, but it's very important that anything that gets negotiated between the agents makes its way onto the purchase and sale agreement, because there is a clause within that agreement that states that any other agreements, including the offer, or maybe emails back and forth, verbal agreements, are no longer valid. So once that P&S is signed, everything else is out the door. So it's very important to have a practitioner who understands that concept and makes sure that anything and everything that was agreed to makes its way on the purchase and sale agreement. And of course, the importance of dates, as we already talked about. So that's step 4. It's really important to, like I said, have that practitioner who focuses on real estate for the dates, possibly giving you a cost savings if we represent the lender as well, and can explain to you exactly what it is you're signing at the end of the day. So in this case, Tom and Giselle, we did their P&S review. We had a couple drafts back and forth between the buyer and seller attorney and finally came to an agreeable draft. Of course, the closing cost credit we threw in there as well. The closing dates, that was primarily already included within the offer stage, but they do want to close 45 days from the signing, with 30 days for the mortgage commitment. So again, those are 2 dates which have already been agreed to within the offer stage. We take those dates, plug it into the purchase and sale agreement. So it may be a little bit repetitive when you actually see the form documents, because a lot of the information that's agreed to in the offer makes its way then to the purchase and sale agreement. In this case also, part of the offer was that the buyers wanted to work appliances into the deal. We made sure that all appliances were listed on that purchase and sale agreement. Sellers agree and both parties sign. Back to Brian.
Yep, back to me. All right, so we're gonna fly now because all the heavy lifting is pretty much done at this point, okay? So really what we do is we begin the mortgage process, which might seem crazy because I was the first one you actually talked to. But remember, all I did for you, way back when was I did the pre-approval, or for Tom and Giselle, let's say, we did the pre-approval, okay? So if I did Tom and Giselle's pre-approval in October and they don't buy a house until next July, well, the pay stubs that they gave me in October are pretty much void. They may not even work at that company anymore. Okay, so what we do at this point is the mortgage person that you're going to be working with is going to get back involved once the purchase and sale is signed, because now we have a contract. Now we have something to actually work on. Okay, so what we're going to do is we're going to sign the mortgage application and send the required documents. So I'm going to tell you at this point, like I have your W-2s and your pay stubs from your pre-approval, but we're going to need updated ones. If it's a new year, we'll need an updated W-2. We'll definitely need updated pay stubs. Okay. This is also when you would lock in your interest rate. Okay, it's a common question I always get. When do I lock in my interest rate? Well, really, there's nothing to lock in until you've signed a contract. Okay, up until that point, it was just kind of an offer, and so many things could happen that would prevent the deal from actually going to closing. So we're going to lock in our rate somewhere around, and that depends on the different lender. Different lenders have different guidelines about when you can lock in a rate, so you want to ask your lender about that. We're also, at this point, we're going to send you a disclosure packet. Okay, this is not legally binding. These aren't the closing documents. This is just a packet of information that we're going to send you on the terms of your loan. And there's also a lot of legal jargon in there. Like we can't discriminate based on race, sex, religion, all that other kind of stuff. But for the most part, the meat and potatoes is the terms of your loan. The rate, the term, closing costs, the good faith estimate will all be in there. Okay? So we're going to send that to you, you'll sign it, and you'll send us back any updated documentation, pay stubs, W-2s that we'll need. We also, at this time, we're going to order an appraisal. Okay? Remember, you've already had an inspection, and the inspection is going to tell you everything that you need to know about that home from the lowest crawl space to the top of the roof, but it's not going to give you value. We're going to order an appraisal just like you would appraise anything, rings, cars, whatever. We're going to order an appraisal to make sure that the home is worth what you're paying for it. Okay? 99 out of 100 times, it's going to come in exactly for what the purchase price is, because we have 2 realtors who decided that that was a fair value for the home, okay? And the appraiser gets a copy of the purchase and sales agreement, which doesn't hurt either. So I wouldn't worry too much about the appraisal, okay? What does this cost? So by the way, there shouldn't be any fees here. An appraisal fee, depending on the type of property, if it's a single-family home, should be in the $300 to $400 range. If it's a multifamily home, depending on how many units there are, can be in the $600 to $700 range. It's just more work for the appraiser. Okay, at this point, we'll also send the title request to the attorney. So we're going to send a title request over to Liz's office, and she's going to do what she needs to do to make sure that there's no liens on the property. Okay, now that we have all of this back, we have the appraisal back, we have title back, we have all of your documentation back, we send it to the underwriter. Okay, and congratulations, the loan is approved. So who is an underwriter? An underwriter is literally just a person who is double checking my work and making sure that you actually qualify for the loan that I have you pre-approved for. Okay, so an underwriter is just going to double check. So if your lender has done their job and knows their guidelines, this should be an easy process and should be fairly quick. There are no costs associated with an approval, but what will happen, okay, is your loan will get approved and there will be conditions. Basically, it's like the underwriter saying, your loan is approved, but we need X, Y, and Z. Okay, usually those X, Y, and Z are very simple things. Like you need to pay for an insurance policy on the home, like homeowner's insurance. You may need an updated pay stub. It's usually small things. So if you get your loan approved, and there are conditions, don't panic. It's very, very, very natural. Okay, at this point as well, we're gonna need to send out what's called a commitment letter. So a very important date that you wanna write down, Liz mentioned it, is there are 2 important dates obviously for you in this whole process. One is your closing date, obviously. The other is your commitment date or mortgage contingency date. This is the date that your mortgage company needs to send an approval out to the buyer's side to let you know that you are 100% approved for this loan. And it can still be subject to a few things. Okay, we need to make this commitment date. All right, and if we don't, we need to ask the sellers for a little bit more time to get the loan approved. Okay, so at this point, once your loan is approved, we're gonna send out the commitment letter. This is also the time where the mortgage company is gonna send the loan down to the closing department, who's gonna start to put the closing package together to send out to the attorney's office. Okay, so basically after the loan is approved, well, like I said, we're flying. We've done step 5, we've done step 6. The next step is to go to closing. Okay, so now we're gonna send the closing package out to the attorney's office, who's gonna be working on that. Before we do that, or at the same time, Tom is gonna get back in touch with you because you need to do your final walkthrough. So he's gonna talk a little bit about what happens at the final walkthrough, and then we're gonna go to closing.
So the final walkthrough, guys, is your opportunity to ensure that the property is in the condition it was in at your home inspection. Probably the biggest concern people have is if they have asked for the flat screen TV and the appliances, that they're still there. And the other biggest thing is that you didn't hire your buddies to help move the seller out and they broke every wall and door on the way out. So you walk through the property, you ensure that everything's in good shape, and now if something does come up, the whole purpose of doing this walkthrough is that we communicate with Liz, the attorney, and we talk to her about making a potential credit or concession at the closing to compensate you so that you have the property that you expected to have. That is our goal. I feel that anything that comes up in real estate can be handled if you know about it. What we don't want are surprises. And so it's really important to do a walkthrough, because if you skip your walkthrough and you go right to the closing table, as soon as that deed is signed, sealed, and recorded, that house is yours. So if you skipped the walkthrough and went back to the house and the washer dryer was supposed to be included and it's no longer there, possession is 98% of the loss, so you have to go fight the seller to get that stuff back. Versus doing your walkthrough, taking the proper steps. The entire kind of mantra of this presentation is to help you make the right steps so that you can make buying a property a smooth and enjoyable experience. I'm going to pass this back over to, I don't even know if you need this, but to Liz to talk about how much you owe and how to close the transaction.
All right, so Brian alluded to it. Once the loan has been approved, it goes to the closing department, and then it makes its way to, so now I'm playing the bank attorney role, to the bank's counsel. So we've already done the title examination of the property, whatever loans perhaps that the seller had a mortgage on the property, or any past due taxes that may have popped up on the title. Everything is going to get cleared up at closing, so we have payoffs for anything that's currently outstanding. And then we get the closing package. And in the closing package, it will give us all the final terms and numbers from your loan, closing costs, all that fun stuff. We'll include that in a final HUD settlement statement, which will literally tell you down to the penny exactly how much money you'll need to bring to closing by certified check or wire transfer. You can't bring a personal check for the final cash to closing. It must be either certified check or a wire transfer. So keep that in mind. Make enough time between your walkthrough, perhaps if you're doing it the same day of closing, to get to the bank. Perhaps if we have the package a day or two in advance, you'll have time to get to the bank as well. The bank attorney will then, once the bank has approved of the HUD settlement statement that we completed the form properly, we'll send it over to you, our customer, to review it in advance. That's really important for my clients. I like to send it out to them as soon as it gets approved, so we have a conversation about what it is that they're bringing to closing, what all the costs are, because it isn't the most user-friendly document, and you want to make sure you feel comfortable knowing that everything's included and you know exactly what you're paying for and why. And it shouldn't be a surprise, because you'll have that good faith estimate from the application process that tells you estimated closing costs, but it's still, in my opinion, really important to nail that down before you actually get to the closing table, just in case there's something that somebody has missed. So really important to make sure that you're asking your attorney for a copy of that once it's approved by the lender. So closing costs, I wanted to just touch upon title insurance really quickly. So there are two types of insurance per se surrounding the home purchase. You have your homeowner's insurance, which is actually physically insuring the dwelling. And then you have title insurance, which is a type of insurance that insures against the title of your property. So just to give an example, when we do examination at the Registry of Deeds, we're physically looking at papers that have been recorded from one owner to the next, right? So we're looking at deed from Bobby Sue to Mary Jane and along down the road to the current seller. We're looking at all the mortgages or any sort of liens. We're looking for releases of those liens to make sure that when it gets to the current owner, everything's clean and there are no liens or encumbrances. In that, for example, God forbid there was a person who signed as Mary Jane, and that wasn't Mary Jane. She had a fake ID. She wasn't the real seller. Not to scare you in any sense of the word, but I would just, with that title insurance policy, it would insure against a fraudulent signing of a deed. So all we can rely on when we're looking at that deed is the fact that a notary public confirmed that whoever was signing was in fact a real person, but what happens if that was a fake ID? So generally speaking, these are things that don't come up ever, but it's sort of the what if insurance policy for your title. The lenders require it. So it is a requirement to pay for lender's title insurance. So generally, I always think if it's good enough for the lender, it should be good enough for you. And sort of touching upon what Brett had mentioned at the beginning, this is one of the largest investments you'll ever make in your life. For the cost of the title insurance policy, we think that it's definitely worth that extra cost. That being said, just so it's out there, a lot of attorneys don't actually mention this, and then later you get to the HUD settlement statement, and it shows who is getting paid from the title insurance, and they see the lawyer's name, and they're like, this is why you wanted me to buy title insurance. But since we are the ones who are examining the title, we actually underwrite that title insurance policy, so we do get paid through that. So just as sort of, so you have all the information on the table, all the cards on the table, it's not necessarily just because we get incentivized by selling the title insurance, it's also at the end of the day a really great investment to have. The best part of it is you buy it once and it's with you the entire time you own the property. Okay, so you never have to buy it again like a normal insurance policy where you're paying either through escrow account on a monthly basis, or if you're not escrowing for those funds, if you're paying it on a yearly basis, you buy it once and you never have to think about it again. One of the main issues that does pop up that title insurance is incredible for is when you're selling your home. One of the most common issues that we do find that are covered by title insurance is missing discharges. So as the closing attorney, it's my responsibility to make sure that mortgage of the seller gets paid, but it's also my responsibility to make sure that the lender sends a discharge letter to the Registry of Deeds to let the world know that that mortgage was paid, right? Oftentimes we'll get to the title examination, we'll see prior owner mortgages that haven't been discharged. Everyone knows it was paid off because it was listed on the HUD, but from the public record standpoint, we don't know that. So the title insurance policy of a seller could kick in, they could indemnify the buyer and sort of undertake to get that title issue cleared up. So no one has to delay, you can still close on time, and all that fun stuff. So sorry for the little tangent on title insurance, but I think it's a really important conversation for you to have with your attorney so you're informed about what it is and whether it's something you do want to buy, at least the owner's policy. So what do you bring to closing? You are bringing yourself, of course. You're bringing a driver's license primarily. Your attorney will let you know whether your lender will require a second form of ID, but generally speaking, it's just a driver's license, but always bring a backup just in case if you have a passport or another form of picture ID. You're also bringing either the confirmation that your wire transfer has been sent to your closing attorney, or you're bringing the certified check. Who goes to closing? One of the surprises that a lot of my clients get is when I actually get to closing, there are not many people there. Depending on, of course, the transaction, sometimes sellers will send their attorney to actually go to closing for them under a power of attorney, so you're actually maybe not even meeting the seller that day. Other times, you'll have the broker of both sides, you'll have the lender, there'll be a really packed table. So it really depends on the transaction. It could be as simple as just you and your attorney signing documents to close. It could be as large of a closing table as 6 or 7 different people. So just to expect that. And basically, you'll get your keys the moment that the deed is actually recorded at the registry. So oftentimes my clients want to get their keys as quickly as possible because maybe they're moving same day. So it's definitely important for them to close at the registry as opposed to someone's office, because at that moment, all the recordable documents could get in line with our examiners, which is really kind of an interesting experience. It's fun for my clients to actually see the registry because it's kind of like a deli counter. You get a number and have to wait in line to actually record your documents. But before that recording actually occurs, we'll do a final rundown of the title so we can make sure that from the last moment we looked at the title examination of the property to the actual closing date, nothing else has appeared, no last minute mortgage or anything like that. So we do that final check, the deed gets recorded, and then you'll hear the jingle jangle of your new keys for your home. And at that moment, you are free to go into your home. Anytime before that, there are liability issues regarding entering the property when it's not actually yours, and you want to definitely not do that. So At that point, you'll get your keys, and I think there's one more. Okay, so for Tom and Giselle. So at this point, they completed their final walkthrough with Tom. Everything looked great. The flat screen TV was there, and there were no holes in the walls, nothing like that. It was in the condition that they expected it to be. They get to the bank to get their certified check for the balance of what they need to bring to closing. They signed the package of closing documents, which I do, just to let you know, it is a large pile of documents, anywhere between 60 and 100 pages, so make sure you get your wrists in shape for that. You'll sign everything with your closing attorney, with your bank attorney or buyer attorney, depending on who's representing you. They'll explain everything you're signing so you don't feel like you're signing your life away, and then we'll do that final title search and actually record the deed. And then...
All right, so and then, remember, we're bringing it back to the story. Our lovely couple in love met 4 years ago. They've been dating for 4 years. They're now buying a house together, and any guy who has been dating the same woman for 4 years and is buying a house with her knows the next logical thing to do is get engaged. This is actually a true story about how my wife and I bought our first home. That is at our closing in our future bedroom. It's a true story. Aww, right?
And they had a baby 2 weeks ago.
Yeah. Things are moving along. So that's pretty much, that's the presentation. Thank you.
Thanks.
Unless I'm missing anything, I think the next thing that...
Questions?
The next thing that we'd like to do is just kind of open it up. We actually have some questions just to kind of get things going a little bit. We actually have some questions, and we actually have some gift certificates to give out if you have the right answers. So I will go first.
I'm going to steal my answer.
No, I doubt it. So my gift is around the corner, but you could just throw this out there, the kind of the first person I hear it from. What is the credit score, the best credit score that you need? Holy cow. Raise a hand. All right, there you go. 740. All right, you said it first. Go ahead.
I think we're going to just open it up for questions and sort of round it off with our 2 trivia questions later. So does anybody have a question for any one of us?
So that's a great question. How long is a pre-approval letter good for? The real answer is a pre-approval is only as good as the information it's based on. So if I pre-approve you on a Monday and Wednesday you lose your job or you miss a car payment and your credit score drops, it's going to change things dramatically. So credit, with that being said, assuming all things stay the same, you keep your job and income stays the same and everything stays about the same, a credit report is good for, depending on what type of loan we're going to do, between 90 and 120 days. But in your scenario, if you're looking at like a year, your example, a year, yes, you're pretty much going to have to do the entire pre-approval all over again. But again, it only takes 15 minutes to update a pre-approval. You'd have to do a completely another one. Every mortgage company is going to we need our own credit report. And I can't tell you how many times somebody sent me over a pre-approval from another company to double check it, and there's been something blatantly obvious that they missed that's been incorrect. So in that case, yes, you always are going to have a new pre-approval. And I recommend, I'll be the first one to say, you want to, like you're buying anything else, talk to 2 different lenders, talk to 3 different lenders, just to make sure that you are pre-qualified or pre-approved and you are getting the best rate. You would. What you can also do is you can get 1 pre-approval just to know that you're pre-approved, somebody who checked the income, the credit, the assets, and then you can kind of shop around and just say, listen, I don't want you to run my credit, but just kind of tell me what your rates are. Here's my scenario. Tell them what your credit score is that you got from the other mortgage company, and just say, based on these numbers, what are you looking at for a rate? That way you can kind of still shop around, and you don't actually have to have your credit repulled every single time. The mortgage companies aren't going to like that because we don't know for sure that that credit score is accurate. So we're kind of presenting a term based on a credit score that we're not positive exists, but it's a good way. Okay, so there are asset-based programs. I can tell you that in order to qualify for them, the assets need to be like in the millions of range. Because what we do is we take that asset figure and based on age, based on a lot of different factors, we whittle that number down to get you a payment that a monthly income figure from the assets that we're comfortable with to base your loan on. But it needs to be in like the millions of range. You cannot get pre-approved without a source of income. Not workers' comp, but what am I? Unemployment is not a form of income that we can use. So you would need to be employed. Yes, most mortgage companies want 2 years of self-employed income, okay? I'm just speaking on for our company, we could do less than 2 years, okay? So, but most mortgage companies are gonna want that 2 year because you may have been a great dentist, but going out on your own and being a dentist and running your business is completely different than working for somebody as a dentist. You know what I mean? So mortgage companies typically want a 2-year history for self-employed income. Yeah, right. Yeah, most people have. So the question was, what is a good number for down payment? I mean, it's really up to you. So is anyone a veteran in here by any chance? Veteran? Okay. Yeah, I'll use experience for that. No, all right, so veterans, if you're buying a home with a veteran, a 0 down. There are certain parts of the state that are rural enough to qualify for USDA loans, U.S. Department of Agriculture. That's also 0 down. For the most part, nobody here is going to qualify for either one of those. Mass housing allows for 3% down, okay, but you have to meet a certain income requirement, okay? So mass housing, basically the government gives each state money to lend as insurance to insure mortgages. So basically, the state of Massachusetts has mass housing, which is basically like an insurance. You know, when you're buying a house, you're putting less than 20% down, the loan needs to be insured. PMI, everyone's heard of PMI before. All PMI is insurance for the mortgage company because we're financing 95% of the value of the home. Mass housing is just a state-funded mortgage insurance company. You still need to go to the mortgage company to get the money for the loan. Mass housing is then just going to insure it. So 3%, that's all very complicated, but 3% is usually going to be the minimum. 5% is what most people in this probably age range are going to do. You know, just based on where we're at, you know, 5%. Some people put 20% down, you know, but the minimum I'd say in here would probably be 3 to 5%.
Can I interject real quick?
Sure.
Just one thing about to piggyback on what Brian just said. What you should put down should be what you're number one comfortable with, what you've talked to your financial advisor about, what would be a good number to maintain the lifestyle that you want to maintain. Because you all have a certain amount of income you make every month, and as Brian said, 45% of your gross monthly income can go towards all of your debt. So if you like to go on vacation, or you'd like to go out to dinner, or you like to go out to the clubs, whatever you like to do, whatever your activities are, that will kind of dictate how much money you put up front, because the more money you put up front, the lower your monthly payment will be. So a lot of people will tie in how their lifestyle is to how much money they put down, if they have the ability to. If you don't have that ability, then they just drive it on a need. And my need is I need to buy a property, I have 5% that I can put down, that's my down payment. Mm-hmm. If you have the ability to put down more, it's driven by lifestyle. So that's just what I see from my consumer.
Great. I would 100% get together with your financial advisor, a financial advisor, to help you figure that part out for you and your goals. So there was another, yep.
So the question is, do I get access to properties before they come on MLS? That is every buyer's dream in this marketplace. And the answer is yes, we do. When you know, my business partner and I are very active in the real estate community. So realtors will seek us out and call us when they have homeowners, because not every homeowner wants to put their house on the MLS. And the MLS is the multiple listing service. It's an intranet site where realtors put properties that then get syndicated to Zillow and Realtor.com. There are many homeowners who don't want people going through their property. They don't want their neighbors in their house. So there are a lot of opportunities. I've actually sold about 10 houses this year that never made it to the multiple listing service. So it actually happens quite a bit, but to find those properties, you really have to find a realtor who is very much engaged in the marketplace and who's very active. The other thing we can do for consumers is that we can send letters. If you have a neighborhood that you have interest in, we can send letters to the entire neighborhood to ask anyone who may have interest in selling, and we can do a private sale that way as well.
Yes, so, okay, I'm gonna talk a little bit about PMI. So if you don't get it, don't worry about it. You can come talk to me after. It gets a little complicated, okay? If you're putting less than 20% down, your loan needs to be insured, meaning PMI, okay? We're not talking about the dwelling, we're talking about mortgage insurance. What is mortgage insurance? It really does nothing for you. It's not an insurance policy that protects you for anything, it protects the lender, okay? Put yourself on the lender's side. We are allowing somebody to finance 95% or 97% of the value of the home. It's very risky. So the client takes out an insurance policy to protect us in the event that the client defaults on the mortgage payment, forecloses, whatever. We can use that insurance policy to cover the losses. Okay? That's what mortgage insurance is. If you're putting less than 20% down, every mortgage company is going to require the loan has mortgage insurance on it. There are different ways, I'll try to be as quick as I can, but there are different ways to insure. There are 3 different ways to insure a mortgage. The most commonly known way everyone knows about is PMI, just a monthly number, $200 a month, let's just say. It's based on your loan amount, it's based on your credit, it's based on a lot of things that the mortgage companies don't do mortgage insurance. We actually partner up with a mortgage insurance company who insures the mortgage, okay? So based on all different factors of you, they spit out a monthly insurance number, and that's what you're gonna pay until the balance of the loan reaches 78% of the original purchase price of the property. Okay, that's one way, PMI. The second way is you can pay a one-time upfront premium so that you never have to pay monthly PMI. It's going to usually be somewhere in the 1.5% to 2% of your purchase price. So in this scenario, you're looking at probably between $6,000 and $8,000 that you can pay upfront so that you don't have to pay that $200 a month for the next 8 years. The third way is the mortgage company pays for the mortgage insurance. Okay, so instead of you paying that $8,000 upfront premium, we pay it for you. And we don't just eat it, and mortgages don't make that much money at closing. So what happens is the mortgage company will increase the interest rate so that then it generates enough revenue so we can pay the mortgage insurance company. But what is really happening there is you're just voluntarily taking a higher rate over the next 30 years so you didn't have to pay PMI. So understand what that really means for you. There's another fourth way, is an 80-10-10. What does that mean? That means that you're putting 10% down and we are using 2 loans, one at 80% and then another at 10%, so that we're actually financing 90% of the value of the home in 2 different loans, but neither loan is above 80% on its own, so therefore neither loan requires mortgage insurance. Okay? So it's kind of like a little, I don't want to call it a loophole, but just another tool that we can use. But you do have to put the 10% down. You do have to meet, now you have to qualify for 2 loans as opposed to just 1. So there are additional criteria, which is a whole nother conversation. Make sense? Yeah.
So the question is, how do realtors like myself become aware of homes that aren't on the MLS? Typically what would happen is that you would contact a realtor who is fairly active in the community, have them come into your property and ask them to talk to buyers as they meet them or talk to other brokers about your home. And, so they would then be engaged in the community, going to realtor events, going to conferences and talking to people. And just kind of through that grassroots effort, they would connect you with a buyer. It's amazing how it can happen quite quickly, actually. Word of mouth. I mean, at the end of the day, this is a kind of boots on the ground. People walk through properties to buy them, so it can happen. It can happen quite a bit. So I just have a quick question from how much time do you want? Because we can do questions after, because I don't want to hold everyone hostage. About 10 minutes? Okay, great. Wait, yes. So the reason I say, so the question is when to talk to the realtor if you're thinking about buying in the spring. I say now. So what we just did was an hour with all the professionals here. Like what my partner and I do is we'll sit down with a buyer for an hour by ourselves and really get into detail about writing an offer and going through the process. Get yourself hooked up on the multiple listing service. But the importance of going out now is right now is the time to start searching neighborhoods, going to open houses. I met a couple that was looking at a condo in Newton and they bought a single family house in Littleton. Took them 12 months of actively searching to find the right property because they didn't know where they wanted to live. But once you zero in on the community that you want to live in, finding the house will be very easy. The biggest challenge that most buyers are faced with is they're like, I don't know where I want to live. I work in downtown Boston. I can go north to Melrose. I can go west to Concord. I can go south to Duxbury. Where am I going to go? So that's kind of how we walk people through. And we typically talk to people about how far will the house be from work? How far is the house from mom and dad or extended family and friends? And what is the lifestyle of the community that you want to live in? Do you want to live in downtown Boston? Do you want to live in Dorchester? Do you want to live in South Boston? Do you want to live in a community where you have to drive to the grocery store or walk to the grocery store? Do you need a train? So kind of going through all those things is the process. But I meet with a lot of people now who want to buy in the spring. So hopefully that's helpful. Yes?
So the question was about condo documents, sort of what, do I review them for the client or not? So generally speaking, when I do any sort of P&S review or buyer representation, that's included. So I'm going to read through the master deed, read through the declaration of trust that's recorded. And I actually do a summary sheet for my clients because they actually, the documents themselves can be anywhere from 20 pages each to 40 or 50 plus. So depending obviously on the size of the condominium project. So it's a lot for a client with everything else that they're dealing with to sort of whittle through this long document. So I do a summary sheet for them. I explain to them sort of what I would want to know if I'm moving into the property. Can I lease it? What are restrictions on leasing? What's the pet policy? Those end up being usually the two most sought after questions that clients want answered. And we'll also take a look at the budget. So we'll look to see if there's a healthy reserve account and sort of advise whether or not the client feels comfortable moving forward buying into that condominium. So it's generally included within the buyer representation fee.
Can I just elaborate just on a sort of along the same topic? This is very important because I would imagine people in here are interested in buying condos, right? I'm sure. Okay. So condos are a little bit different of an animal because they're almost run like little businesses. So you want to, a good realtor will already know this, but you know, we never know who you're going to work with. So things that are important when you're looking at condos is how many in the building that you're looking in, how many of the other units are actually occupied by owners versus renters. Okay, renters do not treat the property, newsflash, the same as the owners who live in them do. Okay, so that's very important. If it's less than 50% owner occupied, so if there's say 10 and 7 of them are rented by, you know, like Southie, Brighton is big for that. If a lot of them are rented, a majority of them are rented, more than 50%, it's going to be tricky to get financing. Okay, the same thing is if one person or entity owns more than 10% of the condos in the building. So if there's 100 condos and let's say the builder who built all the condos still owns 20% of them, it's going to be an issue. Okay, it's going to be harder to get financing for 1,000 different reasons I can go into later, but it's going to be harder to get financing.
And we want you to know this now so you don't have your heart broken when you find a place you love and you can't buy it.
So ask your realtor, do you know what the owner occupancy situation is, and does any one person or entity own more than 10% of the units? And also the budget is huge. Is the budget in good standing? Is it? I was doing a loan literally this week. I found out that luckily it's not a purchase, it's a refinance, but the budget, this budget is managed by a management company and is operating at a $1,000 loss every month. They're managed by a management company. So it's mind-blowing that they even got there. They're operating, it's like any other business. How could you operate at a loss? It's only going to last for so long before something has to happen, and the mortgage company knows that. Okay, so we need good budget. Yep. Question?
Okay, so the question is, if you find the property yourself, can you bring a realtor in to represent you? The answer is yes. It actually, with the advent of the internet, before the internet, realtors used to keep that multiple listing book in their trunks, and they had the access to all the properties. Now with the advent of the internet, it's very common for consumers to contact us and say, listen, my friend bought a house with you and they said you're great at negotiating. I've already identified the property. I went to an open house. I know I like it. I just need you to help me negotiate, be my advocate, help me with the paperwork, and help me get to the finish line with the least amount of headaches. So that happens really quite a bit.
And remember, as a buyer, you're not paying the commission. So it's advantageous for you to seek out your own agent who is really negotiating on your behalf versus the seller's agent who maybe you encounter at the open house doesn't necessarily have your interest in mind. The interest is to sell the property. So very important, get your buyer agent. It doesn't cost you anything.
Yes.
Oh, wait.
Well, because the inspector will inspect. So if you're buying a condo, if a lot of people here are buying condos, the home inspector is going to inspect your unit. You may not find a lot with your particular unit, but they're going to go to the roof and look at the roof. The last thing you want to do is buy a property and find out it's a condo property and the roof needs to be replaced. As Brian said, they don't have enough money in reserve and you get what they call a special assessment, and all of a sudden you're getting hit with these extra costs. So you absolutely want to inspect the entire property. I want to just open up to anyone else who has any general questions before we ask some more trivia and then let you guys go.
Yeah.
So the question is, if you're not a first-time home buyer, do you have to pay a buyer's agent a fee? And the answer is no. I had just said it was a rite of passage that you would pay a fee when you sell a property, but you don't have to pay a buyer's agent. I mean, there are, and let me just say the caveat, there are some buyer agents out there who ask to be paid kind of as a contract, but I would say most residential realtors will take their fee from the cooperation that's offered from the selling agent. Now, I will just one caveat to that is that in theory, the buyer's agent, the more they can get you to spend on the house, the more money they make. So you want to find a realtor who's been vetted, who has your best interests in mind. I always tell people that the business that I want to build is a referral business, and the only way to get referrals is to take care of the client first. So I would rather get someone the best deal possible and have them refer 5 of their friends than try and push them into a property that's a little bit more expensive. That is a practitioner. So the question is, do buyer agents ask you to sign a contract? I take tons of real estate classes, and every single teacher tells the agents to have the buyers sign a contract. And everyone in the room says that you have to sign a contract. I will tell you that you don't have to sign a contract. I don't ask buyers to sign contracts. I sell between 40 and 60 homes a year, and I think it works just fine for my business practice. And when I say that, people are like, oh, maybe it can work. So you don't have to. So find out what is most comfortable for you, and that's the arrangement you want to find. You may find a broker that you love working with, and they want you to sign a contract. And so you have to decide, do you want to work with them or not? You know, it's a business decision. Well, it's, you know, ultimately, you know, I ask people straight up, if you aren't going to be loyal to me, I don't want to work with you, regardless of whether we have a contract. I mean, contracts are in place for people who can't keep their word. So, I mean, that is the essence of why we have contracts. Sure. So if we boil it, I always keep things very simple. That is the most simple reason why people sign contracts. So I'm, you know, I say to people right up front, if you don't feel that you can be loyal to me, I don't think you're a right fit for my business. So, I mean, I would counter by saying that you have to make a commitment. Until you're ready to make a commitment, you're probably not ready for a buyer's agent. So we want to wrap up so that we can do questions privately, but we have 2 more gift cards here. I went with the paparazzi.
I have another Capital Grill I copied. I'm going to start.
I like steak, I'm sorry.
Yeah, ditto. So I have a funky, fun sort of legal question. So it's multiple choice. And in what state is it illegal to use rain barrels or any other method to catch rain for personal use? A, Colorado, B, Florida, C, Massachusetts, or D, Tennessee? No. No.
We're so green friendly here. We're so green friendly here. Where was it?
Colorado.
All right.
All right, last question. Which BC grad scored a touchdown in the NFL last week? Yes. Andre Williams.
Wow,
Great job.
Very good.
Thank you,
done.
everyone.